Today is the 28th of November 2022. My name is David Hickson, and in today's market update, we're going to be taking a look at the S&P 500. I'm going to be focusing in on some detail and considering what we can expect over the next few months. So let's take a look at the chart. Here is the analysis that we've been tracking, and I'm not going to spend much time speaking about the bigger picture because I'm trying to keep these videos concise and to the point. If you haven't been watching recent market updates about the S&P 500, I would encourage you to go back and take a look at the most recent market update that I did, in which I discussed the bigger picture. The basic situation in the S&P 500 at the moment is that we experienced a trough in the middle of June, which I believe was probably a trough of 40-week magnitude, and then the trough in the middle of October was of 20-week magnitude, as you can see in the diamonds beneath that trough in the middle of October. That means that we are expecting the next 20-week cycle trough early next year. That would be in about March, perhaps the end of February. I say the next 20-week cycle trough, but of course if this was a trough of the 40-week cycle in the middle of June, then that would be a very important trough. In early March, it would be a trough of probably 18-month magnitude. That is the situation we've been looking at for many months in these market update videos. However, as discussed in recent market update videos, there is also the possibility that this trough in the middle of October was a greater magnitude cycle trough, which means that the trough in early March next year would only be of 20-week magnitude. The reason that I'm focusing in on the details is that that whole concept of the different possible magnitudes of these troughs has been one that has raised many questions amongst you, and I would like to answer those questions in this week's video. So, how is it possible that we have this confusion over the different magnitudes of the troughs? Sometimes in a Hurst cycles analysis, the magnitudes of the cycle troughs could be debated. The interesting thing about a Hurst cycles analysis is that even when you are not certain about the exact magnitude of a particular cycle trough, there are some things that you can know for certain, and that has to do often with the breakdown of the shorter cycles. And that's really what we're going to be looking at in today's video. So why is there confusion about the magnitude of this trough in October and the potential magnitude of this trough in March? That has to do with the very strong bullish move that elapsed from the March 2020 trough, a trough I often refer to as the pandemic trough. It is quite possible that the pandemic that swept around the world caused a distortion in the cycle picture. And that distortion has raised questions around the 18-month cycle and where that cycle is best phased. However, the important thing when it comes to a Hurst cycles analysis is to take a look at your level of confidence. How confident are you in a particular cycle magnitude? And at the moment in this analysis, I am very confident about the analysis at the 20-week cycle level. In other words, I am confident that this trough that occurred in the middle of June was of at least 20-week magnitude, probably 40-week magnitude, and I am also confident that this trough that occurred in the middle of October was of 20-week magnitude. It might also have been of greater magnitude. The important thing is that that is the level of my confidence, and I can work with that level of confidence in understanding what to expect out of the price action over the next several months. In particular, if we put aside the question of where that 18-month cycle trough should be, we know that we are expecting an 80-day cycle trough over here, where these circles and whiskers, which form a nest of lows, is around the end of December. That's centered round about the third week of December, about Christmas time. We are expecting an 80-day cycle trough. And then we have another nest of lows, as you can see over here, which is centered around the end of February and into early March, and the magnitude of that nest of lows is of 20-week magnitude. In other words, we are expecting another trough of the 20-week cycle here at the beginning of March. As mentioned, that might also be a greater magnitude cycle trough. And so I have complete confidence in the fact that that is when we are expecting an 80-day cycle trough, and in early March is when we are expecting a 20-week cycle trough. Now, let's take a look at how that is going to play out in the markets. First of all, let's take a look at what happened in the previous 20-week cycle. We had price moving up to a peak and then coming down into an 80-day cycle trough according to this analysis, which is phased over here. One might debate the position of that 80-day cycle trough. Some people will position it a little later, perhaps over here. But the important thing is that we had an M shape like that, which was very clear for the 20-week cycle, not very clear for the 80-day cycle, indicating that the 80-day cycle has been influencing the markets with a reduced amplitude. In other words, the 20-week cycle has been really powerful in terms of lifting and then pulling the market down. The 80-day cycle has not been quite so powerful, and it is less evident in the price action. We know because of the principle of variation that the amplitudes and the wavelengths of these cycles will vary, and so it is possible that the 80-day cycle might build up some increased amplitude, and we might see a bigger trough occurring for the 80-day cycle trough over here around about Christmas time. But we have no evidence of that yet. And so our first expectation on the basis of the previous 20-week cycle shape is that we will have price move up to a peak, and then of course it will move down into a trough. Now you will notice that I have drawn this 20-week cycle shape ending a little bit higher than the previous one and with a peak at about the midpoint. In other words, I've drawn completely arbitrarily a slightly bullish cycle because of the fact that it has lifted price up a little bit and the fact that it has a peak in about the center of the cycle. However, that is not an assumption that we can make at the moment. The magnitude of this trough in March, which as I've mentioned could be of 20-week magnitude or of 18-month magnitude, will be revealed by the shape of this cycle. If that is going to be a much greater magnitude cycle trough that forms in March, then we would expect a bearish cycle shape with price dropping to a lower level and experiencing an earlier peak. However, if it is only of 20-week magnitude, then we are likely to experience a more bullish cycle with a later peak and a higher trough. I hope you can see how the structure of the move is going to be very much the same no matter what the magnitude of the cycle trough is. The only difference is that if this is only a 20-week magnitude cycle trough that forms in March, we will experience a more bullish move, and therefore we are going to experience a later peak. That means that the peak that forms after this 80-day cycle trough expected late December will probably be a higher peak. However, if the greater magnitude cycle trough is occurring in March, then the peak that occurs after the 80-day cycle trough around Christmas time will be a lower peak. As a starting point for our expectation of what is going to happen, we already know that an 80-day cycle trough is expected in late December, and then a 20-week cycle trough, at least, is expected towards the end of February or early March. But now what about the price levels? I'm often asked, at what level is that 80-day cycle trough going to occur in December? And at what level is the 20-week cycle trough going to occur in March? The answer is that we don't yet know at what levels those troughs are going to form. The important thing is that we are expecting a peak around about now for the 80-day cycle trough, after which price is going to come down. As it starts moving down, we are going to be able to generate targets. How will we do that? There are various ways of generating targets, and one of the most useful ones is the future line of demarcation, the FLD. Here is the FLD for the 80-day cycle, and the reason that I am displaying the FLD for the 80-day cycle is because it generated an interesting target way back over here in the final week of October when price crossed up above the 80-day FLD and generated a target to the upside. Interestingly, the target that it generated as a result of that price cross was at a level of 40.60. You can see that price has not yet quite reached that level. It is possible that price could keep moving up a little bit and achieve that target. So far, it hasn't quite achieved the target. It has reached very close to that target, and so that is not a particularly bearish sign. However, there is still scope for it to move upwards What about the target for the move down into this 80-day cycle trough? Can we use the 80-day FLD for that? Well, here's an interesting point. If the magnitude of this trough in the middle of October was of greater magnitude than 20 weeks, in other words, there is the possibility that the 18-month cycle trough did occur here. If that happened, then we would expect the 80-day cycle FLD to provide support. And so the 80-day FLD provides a potential target for the move down into the 80-day cycle. However, if the magnitude of the trough in the middle of October was of only 20-week magnitude, then we would expect price to cross down below the 80-day FLD and generate a target. We can't answer that question yet. However, we're not going to be sitting around waiting until price reaches the 80-day FLD to see what happens. We will be watching the shorter FLDs as price moves down towards that level. And here is a range of those shorter FLDs. If we zoom all the way in, you can see that the FLDs form a pattern. Each FLD is, of course, the same price. It is median price. It is displaced to the right on our charts by the average wavelength, or half the average wavelength of each one of these cycles. Now, the way that this works is that as price starts moving down through these FLDs, it will form a peak, of course. It might have formed the peak on Thursday, but we can't say that yet. But once it has formed the peak, it will start moving down below these FLDs. As it crosses down below each FLD, we will generate a target to the downside. These FLDs are forming a little bit of a cascade pattern. It's not a perfect cascade pattern by any means. A cascade pattern is where these FLDs are all lined up, and a projection as price moves down through each one of the FLDs takes us below the next FLD. In other words, price will move below that FLD to achieve that projection and generate another projection to the downside. As mentioned, this is not a perfect FLD cascade pattern. But as price does move down through these FLDs towards the 80-day cycle trough, which we are, of course, expecting towards the end of December, we will be able to generate those targets and determine at what level we are expecting the 80-day cycle trough to form. What about our price targets for this 20-week cycle trough or greater magnitude cycle trough that we are expecting in March of next year? The same thing applies. We cannot yet generate a price target for that trough because we need to witness what happens as price moves down towards it. And there's a good deal of price action that needs to happen before that. Price is now moving up towards the 80-day cycle peak. Not yet confirmed. It might have formed, but it's not confirmed yet. Then we are going to experience a move down into that 80-day cycle trough. Then another rise up to a second peak, which, as mentioned, might be a higher peak or a lower peak. Again, we will be watching what price does in terms of crossing the FLDs and generating targets to the upside to forecast where that peak will occur. If it's a higher peak, then we have a bullish cycle on our hands. If it's a lower peak, then of course we're looking at a bearish cycle unfolding. Then as price moves down, again we will be watching how it crosses through the FLDs for the move down into the 20-week cycle trough. The danger with me drawing these lines on the charts is that it can be a little misleading. I am indicating the general structure of the move, but the exact price levels can only be calculated as price action unfolds. There is an interesting tool in Sentient Trader called the composite model line, which takes the analysis that has been found on the chart, and in the past it recombines the influence of each one of these cycles by calculating the wavelength and the amplitude of each one of those cycles and recombining them and producing this orange dashed line. It then extends that line into the future on the basis of the idea that the cycles will keep beating with the same rhythm in terms of their wavelength and the same amplitude. Of course, because of the principle of variation, we know that is a flawed concept. The wavelengths and the amplitudes of these cycles will change, and the composite model line should never be taken as absolute gospel. It's not absolutely what is going to happen in the market, but it does generate very accurately the structure of the move. If we combine this tool with the FLD, for instance, you can see here is the FLD for the 80-day cycle. The composite model line is indicating that we are coming into a peak of the 80-day cycle, and that it will then, of course, move down. Is not indicating a very big move down, and that's because of the evidence that it has found of each one of these cycles in the past price action. Interestingly, it indicates that the 80-day cycle trough might occur at about the level of the 80-day cycle FLD, which, as I mentioned, is one possible target for that price move. Then the composite model line is indicating that price is going to rise up to a higher peak. The interesting thing about that is that it is based on the analysis on the chart. If there are errors in the analysis on the chart, then in fact that will not happen. In other words, we might not reach a higher peak. That shouldn't be taken as proof or even evidence that we are going to experience a higher peak. What is more important is the structure of the move. And then, of course, we are going to experience a move down into this 20-week cycle trough over here at the foot of the chart. The composite model line is very useful for plotting future price action in terms of the structure. When, at this kind of time scale, is the market going to be moving down, and when is it going to be moving up? The exact targets for each one of these price moves will be calculated as price crosses FLDs and generates those targets. What about price crossing the other cycle tool, the valid trend line? When price crosses a valid trend line, it doesn't in fact generate a target, but what it does do is it confirms that a trough or a peak of a particular magnitude cycle has formed in the market. Here are the 10-day and the 20-day VTLs, or valid trend lines. When price crosses those trend lines, it will confirm that a peak of the 40-day or the 20-day cycles have formed in the markets. There is one other tool that we can use to calculate targets for each one of these moves, and that is not actually a tool that Hurst himself defined. It is something that we developed when we were working with Sentient Trader and developing the various tools in Sentient Trader. That is something that we call the Hurst cycle zigzag. Here is the zigzag for the 20-week cycle. I'm not going to go into too much description about what a zigzag is, but effectively a zigzag for a particular cycle joins a trough of that cycle to a peak of that cycle. Interestingly, this is the zigzag for the 20-week cycle, indicating that the 20-week cycle has already reached its peak zone, if you like, and is in the process of turning down. At the moment, the target for this price move is a very big, very wide target, as you can see. That's because there is simply absolutely no price action yet to define the exact position of that price target. We can add shorter cycle zigzags. For instance, here is the 80-day cycle zigzag, indicating, interestingly enough, that price is still moving up into the 80-day cycle peak, and it's indicating a slightly higher peak over there before moving down into the 80-day cycle trough. We can zoom in and apply much shorter cycle zigzags. This is the 10-day cycle zigzag, indicating that price might still rise up to achieve the target that I mentioned earlier in the formation of the 80-day cycle peak. We can also add a 5-day cycle zigzag, and there you can see it's providing a very similar interpretation of the current price action, which is, of course, that price is moving up into this 80-day cycle peak over here. The important message about today's video is that even when we have some uncertainty around the position of the longer cycle troughs, such as in this case the 18-month cycle troughs, we can focus on the shorter cycles and develop a good deal of clarity around what we are expecting, particularly in terms of the structure of the move. And our understanding of what we are expecting to happen is based, first of all, upon the timing of those events. In other words, we have a good deal of clarity around when the troughs will occur. We have greater clarity around when the troughs are going to occur because of the fact that in stock markets, the troughs of the cycles are synchronized. The peaks, however, are not. And so we do not have quite so much clarity around when the peaks are going to form. And so we start with a good deal of clarity around when the troughs will form. The peaks are not quite as obvious in terms of their timing. And finally, the levels at which these troughs and peaks will form are revealed as price generates price targets. I do hope that this focus on the details has provided some answers to those of you who were asking questions about where and when we can expect these troughs and peaks to occur. And I hope that today's video has provided you with great insight into the structure of the next few months in the S&P 500 and of course other stock markets in the US and around the world. I do hope that you found this market update useful and interesting. Please go along to our Hurst Cycles Notes site where you can join up and receive weekly expert analysis direct into your inbox. If you have any questions, join us on our Discord server. And of course, you are very welcome to ask your questions in the comments below this video.